Hi guys, this is SJ at Champion Trader HQ and welcome to episode 106 of my Making Forex Great Again weekly video update. And this is for week ending Friday, February the 4th, 2022. As always, if you want to connect or you want to chat or if you have any questions, you'll find all my contact details below this video so we can connect via the usual channels, Telegram, Skype, Instagram or Facebook Messenger. And just before I get started, this is just a quick reminder to let you know that we have videos covering all the latest results and stats for our featured $2,000 account. That's the one in the main website, and also from the $20,000 real money account, otherwise known as the $1 Million Challenge account. And this is where the Money EA, the trading robot, is currently attempting to turn a real money $20,000 account with IC markets into $1 million over the next 12 months. That would be from November last year, 2021, through to the end of November this year, 2022. So if you go check out both videos in our channel, and the links to the various playlists are in the description too, you'll be able to see how well both accounts are currently doing. So in today's video, and again based on questions I've recently received from interested prospects, I'm going to go over the following subjects. So let's see. Okay, I'm briefly going to cover broker spread, tell you what it is and why it's important to trade with the lowest spread possible. Plus I'm going to give you a quick explanation, hopefully a quick explanation of leverage, margin and drawdown, and how those elements, how they apply to your forex trading, regardless of whether or not you're using a trading robot or if you're trading manually. And assuming I don't pass out due to all the excitement over explaining all of that stuff, I'm going to finish off by taking a quick look at your MT4 trading platform, and I'm going to go over the information that's displayed right at the bottom of the chart there and how it all relates to your trading. Okay, and by the way, if you want a quick overview of the forex market and you want to know how it all works, how and why the market moves up and down all the time, you want to know all the ins and outs of pips, pip values and the different lot sizes in forex, you want to know how trading manually compares to trading with a robot, you want to know how the Money EA, the trading robot, works, how it trades, and you want to know the full lowdown on our 30-day risk-free trial, and how you can be up and running trading and of course making money with the robot within the next 24 hours. So if you want to know all that, be sure to check out the previous the previous 5 videos in this particular series, and you'll find all the answers. Hopefully you'll find all the answers to all those questions in there. The link to the playlist, like I say, there is in the video description below. So let's get started. Okay then, now I could go into great detail and go on for hours on end regarding all these different elements, but I'm not going to do that. Instead, and as I always try to do in this video series, I'm going to try and keep things as simple and as straightforward as I can. And hopefully by the time you finish listening, you'll have a better idea or a bit of a better grasp as to what all these different elements are. Spread, leverage, margin and drawdown. And you'll know how they can directly and indirectly affect your forex trading. Needless to say, but I'll say it anyway, the Money EA, the trading robot, it does have all of this firmly in hand. It understands all of it, of course, so you don't have to. So yes, you'll have a good idea as to what it all means at the end of the day, spread, leverage, margin, drawdown, etc. But you don't need to fully understand it chapter and verse, nor do you need to be an expert either. That's what the Money EA, the trading robot, that's what it is there for. Okay, so first up with the questions. Here we go. Can you explain what spread is in Forex trading? Okay then, so spread is the broker's additional commission, or VIG if you like, on each trade placed, and it's typically the difference. It's the difference between the current buy price and the current sell price, i.e. the difference between the bid and ask prices, which you will find in the top left panel of your MT4 trading platform. For example, if the bid is 1.3527, the ask is 1.3528. Okay, the difference between the two, like I covered in episode 105 last week, the difference between the two there, between 27 and 28 in this example, is of course 1, or 1 pip to be exact. So the spread is 1 pip. Okay, so that means the moment the trade is placed, the moment you place your trade, that trade will be immediately negative by 1 pip. That pip being worth X dollars. And again, I explained this last week, so it could be worth, that 1 pip could be worth $1, $5, $10, $20 or more. So that 1 pip is the ground, so to speak. It's the ground that the trade would need to make up prior to it reaching break even, and then hopefully moving into profit. Okay, now the same applies if you're using a broker with as you could do, you could be using a broker that's got lower commissions, but conversely they have way higher spreads. So if the spread there, for example, was 8 pips instead of 1 pip, so you've got a bid of 35.20 and ask of 35.28, you've got a gap of 8, which is 8 pips. That means that the moment you place a trade, it will immediately be negative by 8 pips, and the trade would need to make up 8 pips prior to it reaching break even, and then again moving into profit, and so on and so forth. Now, with regard to individual broker spreads, IC Markets, which is one of our recommended brokers, it's typically, I would say, nearly always the lowest for spreads when it's compared across the board to all the other brokers, with their GBPUSD spread ranging from 0, and you can't get much lower, ranging from 0 pips to just 0.1 or 0.2 on a typical day. Now, of course, it's not a 24 hours a day 0 pip spread, because the numbers can vary, the spread can vary with all brokers. That can vary dependent upon news and other events, and when the market first opens for the week, which is around 5 p.m. Eastern, 2 p.m. Pacific. That's about 10, I think that's 10 p.m. UK time, 10 p.m. GMT on a Sunday evening. But more often than not, the spread with IC Markets specifically will be 0 or very, very close to 0, which means you'll make more profits overall on all the winning trades that the robot places. So next question, can you explain what leverage is in Forex trading? So leverage allows traders to trade notional values far higher than the capital they have deposited. For example, leverage of 500 to 1. Okay, leverage of 500 to 1, that means that you can trade a value 500 times greater than the capital in your trading account. So another example, if you have $1,000 in there, you can, in effect, you can trade with a total of $500,000, which is 500 times greater than your initial $1,000. That's what the 500 to 1 leverage relates to. Now, nearly all, as far as I've seen anyway over the past few years, nearly all European-based brokers, Forex brokers, due to legislative changes, they offer a maximum of only 30 to 1 leverage. Okay, 30 to 1, which overall, with regards to the trading robot, 30 to 1 is a bit of a non-starter. It's pretty useless. Okay, so for the best results from the Money EA, the trading robot, for the best results, we'd always recommend that you use a broker that offers at least 500 to 1 leverage. Okay, and of course ultra low spreads too, just like our recommended brokers at IC Markets, or if you're in the US or Canada, the broker that we recommend would be Coinex. And you'll find links to both of those brokers in the video description below. So that's my explanation, brief as it is, regarding what leverage is in Forex trading. So we'll move on to the next question while we're on a roll. So can you explain what margin is in Forex trading? Wow, the questions just keep getting better. Okay, so margin is the amount of money needed to open a leveraged trading position. So your current margin and free margin levels, okay, they're nearly always displayed at the bottom. If you're trading, they're always displayed at the bottom of your MT4 trading platform, the details of which I'm going to go over in a few minutes. So with regards to the much coveted term margin call, this is what happens when risk and common sense go out of the window and the trader places trades that are way too big, way too risky for their account size. And needless to say, nearly all manual traders do this. Okay, it comes natural. It's just so easy for them to trade way too big and to trade way too risky, and that's where the margin call comes in. Now, in that scenario that I just mentioned there, when the market goes in the planned direction, which it does sometimes, when it does that, that's great. But if it goes in the opposite direction, as it nearly always does, and it goes against that position, then the available margin reduces dramatically, at which point the trader's account would more often than not be blown. This situation, when it's in full flow, it can be offset. It can be kind of tempered by way of the trader adding additional funds to their account, but again, that rarely happens. You can see the results of an epic margin call and all of the story surrounding it in the movie of the same name. There's a screenshot there in the video. Margin call. The bit about it all going tits up, I added that. It's not part of the movie poster, although maybe it should have been, you know. Okay, so moving swiftly on to the last question, I think it is. Okay, so can you explain what drawdown is in Forex trading? And yeah, of course I can. So the official definition of drawdown is as follows. Okay, drawdown is simply an indication of how much an account has dropped, measured from its highest peak, its highest level, to its lowest level, to the trough, from the peak to the trough, during a specific trading period. Okay, and now that period, that could be a week, a month, 6 months, a year, or longer, for example. But that's what drawdown is. That's the legal definition, so to speak. And just like in the graphic on your screen there, you see the difference between the high peak and the low trough is what we call drawdown. The gap there, I've highlighted it in yellow on the chart, and that is typically measured in either percentage terms or in currency terms. Okay, now following on from that, with regard to drawdown, and specifically with regard to trading with the Money EA, the trading robot, when you do that, you will, when you're trading with it, with the robot, you will from time to time, you will experience medium levels of drawdown, simply because drawdown is required for the robot's battle-tested and proven proprietary trading strategy to work to its full potential. It's got to have drawdown. Okay, and in doing so, that's why it effortlessly cranks out the consistent and substantial gains that most traders are currently experiencing, just like the results listed in our main website. And don't forget, of course, when your account, this is important, when your account is in drawdown, if it says bottom right hand corner minus 50, minus 75, minus 100, okay, it's only a temporary negative situation. Okay, it's only a temporary negative situation. It is not money that's been lost. That's because once the market turns around, okay, once it goes back up or it goes back down, whichever direction you need it to go in, once it does that, the drawdown disappears and you'll be back into positive territory. The only time you would lose money regarding drawdown is if you have, say you have 4 or 5 trades on, the drawdown is $50, you decide, instead of waiting for the market to turn round, you decide you're going to close those trades out. In that instance, that would be money lost. You would have lost $50, as opposed to hanging on, waiting for the market to turn around and going back into profit. So to wrap up this question, the questions in this particular section, we're now going to take a quick look at your MT4 trading platform, so we can see actual examples of some of the stuff that I've just covered and how it all relates to your trading and how everything kind of ties together. So let's have a look at the next graphic. Okay, there you go. So this is the info that you'll usually see in the trade tab down at the bottom left hand corner of your MT4 trading platform. As you can see there, I've stuck a big red arrow pointing to it. Okay, so that's the trade tab. If you click on there, you will see all the relevant information. So there you can see, going from left to right, you can see your balance, your equity, your margin, your free margin, and your margin level numbers. They're the ones highlighted in yellow there. Balance, equity, margin, free margin, margin level. So here's what all those numbers mean, and I'm going to use some smaller rounded up numbers in the next bunch of graphics too, just to make it easier to explain. Okay, so balance, that's your account balance, your current account balance, excluding the trades you currently have open. Okay, your account balance excluding the trades you currently have open, that's the balance. The equity, that's your current balance based on the positions of all your open trades, and this number it will move every few seconds for that reason. That's the equity, that's your current balance based on the positions of all your currently open trades. Now margin, that's the minimum account balance needed to keep your trades open. That's what the margin figure relates to. Free margin, that's just the difference between your equity and margin, as you can see on the screen there. That's what free margin relates to. And margin level, the last number there. Now this percentage number, this enables you to know how much of your funds are available for new trades. So the higher the margin level, the more free trades, sorry, let me start again. The higher, I knew this was going to happen, the higher the margin level, the more free margin you have available to trade with. Okay, and of course conversely, the lower the margin level, the less free margin you have available to trade. Now this number should always be higher than 100%. If it drops below 100%, you basically, in technical terms, had it. Okay, so that number should always be higher than 100%. And you will find if you're trading with the Money Expert Advisor, the trading robot, it's always into the well into the thousands. So no problem there. So hopefully that covers and explains the weird and wonderful subjects of spread, leverage, margin and drawdown, and the numbers you can see at the bottom of your MT4 trading platform. And hopefully that will make everything a lot easier to understand, and it'll also make a lot more sense too. And just as a very quick reminder, if you want further details on the Forex market and you want to know how it all works, how and why the market moves up and down all the time, you want to know all the ins and outs of pips, pip values and lots in Forex, you want to know how trading manually compares to trading with a robot, how the Money EA trading robot trades and how it works, and you want to know the full lowdown on our 30-day risk-free trial and how you can be up and running, trading and making money with the robot within the next 24 hours. If you want to know that and a bunch of other stuff too, be sure to check out all my other videos in the series, and you'll find the links to the playlists for all those videos in the description below. Okay then guys, that just about wraps up today's episode of my Making Forex Great Again weekly update video. I still have a bunch of stuff to cover, plus more questions I'm going to be answering that were sent in by interested prospects. I always have plenty of those, and that's great, and a bunch of other stuff to boot. So look, don't forget to hit the subscribe button and the notification bell too, and then you'll be notified when the next video gets uploaded. Okay, so this is SJ here at Champion Trader HQ signing off for today. Thanks again for taking time out to watch this video, and don't forget to check out our main website over at themoneyea.com. Then if you haven't already, you can start the risk-free 30-day trial and you can be trading within the next 24 hours. And all the links are in the description below this video, together with my Telegram, Skype, Instagram and Facebook contact details. So I will see you again in the next video. Bye for now.